system. And that is due to globalization. People would like to have a frictionless capital of flow into different continents, into different countries, and into different regions. And so there has been a discussion about what exactly crypto means. And many of the people say crypto is a programmable money. So in Web 2.0, people have been saying software has been eating up money, or have been eating up the world. Now, because of crypto, it's enabling that the money is on software. What it means by that is crypto is by its nature or by its design is seizure resistant. It's a non-sovereign digital money. So if I want to send 10 million US dollar to another country, if I have such money, it won't take me a vast cost to send such money because of the banking fees. Also, crypto, by its design, has adopted a cryptographic technology that enables privacy and anonymity. And also, because crypto becoming a money, there is a lot of different financial products that we can create, including insurance, lending, derivatives, and so on. According to ARK Investment, there are three major common characteristics of traditional asset classes. And number one is that an asset class has to be investable, and that means there has to be an ample liquidity. Number two is that it has to be price independent, and that means a single asset class needs to have low or zero correlation with another asset class. And number three is that it has to have a clear and distinct risk-return profile, meaning if people invest in a certain asset class, there has to be a return. And crypto has been proving all three of these characteristics over the past few years, and thus crypto is becoming a new asset class. It's also very meaningful to note that among these three characteristics, and among all the cryptos, Bitcoin especially has been proving to show low correlation with other existing asset classes. For example, Bitcoin has low correlation with S&P 500, with US bonds, gold, and oil. While low correlation does not mean an inverse correlation, meaning that when the market goes down or if we are hit by another financial crisis, it may not mean that crypto or the Bitcoin price will go up. However, there is a certain amount of portfolio effect that people can expect and may be able to enjoy. And thus there is the portfolio diversification effect. And that is leading towards these institutions and private investors to diversify their assets by investing in crypto. Bitcoin also has been showing an amazing return over the past few years. It has been showing returns above all other asset classes, in fact. By that, it may mean that by investing in Bitcoin, you already have a given amount of alpha that you may be able to expect. It may be a good long-term investment strategy for funds, for those who are not too well educated about crypto. However, as a VC investor or a fund who want to deep dive into crypto and capture the massive opportunity to invest ahead of anyone else to this new asset class, there has to be an investment strategy to beat the market. And while the full potential of crypto remains to be a question, if crypto is to become really an asset class, if you see what the market cap of the total money is. It's at $84 trillion. The stock market consists of $67 trillion. And crypto, which we're talking about right now, is just around 200 billion. And that means there is such a huge and massive opportunity to invest into crypto. And so how to invest into crypto and what it means to invest in crypto as a private investor is the topic that I would like to talk about today. And there has to be a different strategy when you're investing into crypto assets compared to how you've been investing into other asset classes, or especially investing in startups outside of crypto. And that is because of the three characteristics that crypto has. Crypto is global. Crypto has its own native earning mechanism. And crypto is almost immediately liquidated. Because of these three factors, investors need to be flexible and need to adjust their mindsets between how they've been investing into other asset classes or different startups. First of all, crypto is global. VC investment, by its nature, has been told how it's a regional business. In order to invest into the top startups or into top businesses, you have to have a very close network with the entrepreneurs, have great knowledge about a certain region in order to capture the opportunity. Thus, it was pretty much difficult for a fund, for example, in Korea, to invest in a startup in Africa or even in the US. However, in order to beat the market or beat the alpha of the other investors in crypto, you need to understand how crypto is global. And what it means by that is that in crypto, there will be different adoptions happening in different shapes, in different markets, and in different timing. For example, in North America, or in the US, or in Europe, we see a lot of these platform-driven or protocol-driven deep tech projects coming out. Facebook Libra might be one. Kick, which is being prosecuted by SEC right now, is also by Kin. But there are a lot of these protocol-driven projects that are valued at few billion US dollars are coming out of US because there are these talents who have been technically well educated and have been working on these projects or concepts and these technology for a while. There's also a tendency that in Asia, where we're sitting here today, a lot of projects are very application focused. They have been more curious and have been focusing more about what exactly the application and the use cases of crypto would be. So though it's difficult to say that there are no protocols coming out of Asia, or there are no dApps coming out of North America and Europe, there has been such trend or tendency for the past years. Interestingly, in Latin America and Africa, a continent that Binance Labs has massive interest in, is where Bitcoin has already proven its product market fit. And what it means by that is, while we have seen the crypto winter, like last year, end of last year, or maybe we are also going through the crypto winter again, Bitcoin transaction volume in African countries or in Latin America has been exponentially growing regardless of the Bitcoin price. And the reason being is that their central banking system is not as trustable as those are in these advanced countries. And thus, users, or the mass users, are really into Bitcoin to capture the store of value. Also because there are a fair number of people who are working in other advanced economies and send their money back to their home countries. There are a lot of remittances happening cross-border in these continents, and people, because of the transaction fees that may happen, the commission fee that you pay for the banks, there is a proven product market fit there. So payment and remittance is definitely a product that is picking up in these regions. We've been discussing about what mass adoption might mean in crypto in the previous session. And I do believe, or we believe in Binance Labs, that the mass adoption or the adoption of crypto or the usage of crypto may differ according to these different needs and the different trends and the different background that they have been building pre-crypto in different regions. And thus, we have been investing across different continents, across different countries, including those investment that we have made in Africa, and also in Europe or in US or even in Israel, and of course in Asia. In order to make these investments across different regions, of course, Binance Labs had to go and meet the entrepreneurs, grassroots communities in the different regions, and understand and expect what are the different use cases that we'll see in different continents. And we were able to do this not by ourselves, but with our vast Binance Labs mentor network, which is a group of people coming out of non-crypto and crypto scene who has experiences in building a successful business in the past decade. They've been helping out our portfolio companies or our soon-to-be portfolio potential companies in finding their product market fit and sharing their knowledge about how to build a successful business or how to build a successful startup. Because at the end of the day, what the crypto startups or the crypto projects are also doing is building a successful business. And also we have recruited our Binance Labs ambassadors in Africa and Latin America because we believe that it won't be people who are educated in the advanced economies coming into these regions with their knowledge building a business there, but it will be people who grew up in that region, who really face the problems and knows the market well, who will be building the business from that region. So we've been backing the projects and the entrepreneurs who were born and raised in that certain region. Another thing, though it may not be too significant in terms of the returns that you may see from these mechanisms, crypto has its own native earning mechanism that was impossible in Web 2.0, including mining, staking, and airdrops. These mechanisms are a mutation of the existing financial products like deposits, interest rates, and so on. It is important to understand the different mechanism of the consensus and how each block is created per different projects. And it is also one of the areas where investors can value add to their portfolio companies. For example, there might be different consensus mechanisms over the portfolios that you have. And because obviously there are a lot of crypto funds out there, it is important like what your value add is into your portfolio. And the best value add, of course, is by participating in such network. And Binance as an exchange has been doubling down in these mechanisms because it's a financial product that enables users who are interested in a certain crypto network to value add and participate in the network, and also same time enjoy the benefits of the network. So we have been announcing new products such as Binance Lending, which is a lending platform. It is not a P2P lending platform where we match the lending products. Binance Lending is a product where people deposit their crypto and it'll create a yield. And Binance is essentially participating to produce a block or participate in the network on behalf of the users. Staking is also non-custodial, meaning Binance staking is non-custodial, meaning we are not keeping the assets or we are not keeping the private keys of our users, but enabling people to participate in the proof of staking mechanisms. And airdrops, of course, we've been supporting different airdrops of the projects that we have listed on Binance.com. Another interesting thing is that crypto is immediately liquidated, and that may mean, because while in general startups, you have to go through those different phases of startup, going through seed, Series A, B, pre-IPO, and then IPO, because of ICO, because of IEO, which stands for Initial Exchange Offering. Now crypto projects get to be on public as soon as they would like to. And as an investor, this may mean that there's a shorter lockup. Your investment horizon may be shortened, and it's wise to maneuver around the different lockup schedules and be willingly participating into IEOs as well. And Binance Launchpad is the IEO platform that enables different projects to do token sale, public token sale towards our Binance users. And it has been the most successful IEO platform so far globally. So I've been talking about the different strategies in terms of how we invest at Binance Labs into different crypto projects, and what are the necessary things that you need to keep in mind when you're making investment into crypto. Of course, from the institution's perspective and so on. There are a lot of different topics where people are betting into, including DeFi, gaming, and different protocols like scalability chains, layer 2 solutions that funds are continuously excited about. And Binance Labs has also been investing in those theses as well. But at the same time, we do believe that whatever the theme is about, investment is, again, about investing into the best entrepreneurs who understand the problems and who are able to, and passionately able to, tackle those problems by themselves. So we've been very team-driven. At the same time, because it's a part of the exchange, we're relatively more long-term than any of the funds out there. And we try to be as much as strategic as possible to the portfolio companies. And that has been our strategy that has been working very well. The themes don't matter. It's not about whether you're interested and you think DeFi or gaming will be sexy. It is about the teams, and it is about finding the product market fit and the real needs. And that has been our investment thesis so far. Thank you, everyone. It was great meeting you all.